click on the subscribe button and remember to press the bell icon for regular notifications from our digital blogger. Hello friends, welcome to our digital blogger. Today we are going to talk about a very basic topic, how are brokerage charges calculated in the stock market. Now we've got a lot of requests, a lot of suggestions from our users, especially who are beginning their journey into the stock market world, that we should be coming up with such a basic video so that they can have an idea how are these brokerage charges or the other charges going to be calculated in their day-to-day trades, and how are their profits going to get affected. Now for you probably it might look very basic if you are a trader already, but again this video is made for a very specific set of users who are looking to enter into the stock market. So let's get started. So before we move ahead in this video, we need to understand what exactly are brokerage charges. Now if you're looking to trade in the stock market world, you have to understand that you need to open a trading account, and for that you need to get in touch with the stockbroker. And whenever you actually trade in the stock market, you are supposed to pay some sort of a commission, some sort of a brokerage to that particular stockbroker involved. Now conventionally a lot of stockbrokers have been charging a percentage based brokerage from their clients, from their traders and investors, but a lot of new models have come up and we will be throwing some light on that. So first up we have a full service stockbroker. The kind of brokerage charges they put against the trades are percentage based. So generally whenever you get in touch with the executive of a full service stockbroker, the kind of a language tone they have is that they're going to charge you 10 paisa, 40 paisa, 1 paisa brokerage. Again, within trading there are multiple types of segments. For instance, you can trade at intraday level where brokerage is slightly lesser, or you can trade at delivery level. For full service stockbrokers, the brokerage is slightly expensive there. Now when they say 10 paisa, 40 paisa, do not take it literally. It does not really mean that they're going to charge you 10 paisa brokerage. That basically means that they're going to charge you 0.10%, 0.40% or 0.01% depending on your trading segment, depending on your brokerage house. So it's a percentage based model, and that percentage is going to be calculated with respect to your trade value. For instance, if you trade for 10,000 rupees, and 0.4% is going to be 40 rupees brokerage charge. So it really depends on your trade value at the end of the day. We'll take an example to make things more clear. For instance, if you bought 1000 shares of TCS, now each share value was, let's say, 500 rupees. So your total transaction value in that particular case was around 5 lakh. Let's say after 4 days you sold those shares at 550 rupees. Now again in this case the transaction value is going to be 5.5 lakh. Now since you sold it 4 days later, it's going to be a delivery based trade. The overall transaction value in this case was 10 lakh 50,000. Let's say your brokerage house charges you 0.4% brokerage for delivery. Or in that particular case you have to multiply 10.5 lakh with 0.4%. That would come down to around 4200 rupees as brokerage. So for that particular value of trade, your broker is going to be very high because it has a direct correlation with your trade value. So brokerage charge for those two trades are going to be 4200 rupees exclusively. Now let's say if you trade at a very small scale, let's say you trade for 10 rupees share and you bought 10 shares only. So in this case you got a trade value of 100. Now you sold those shares at 12 rupees. So in that case the trade value was 120. So overall transaction value was 220 rupees. Now you multiply 220 with 0.4%. It's generally around 0.88, 0.9 rupees. So that's very less. But when you talk to full service stockbrokers, they don't take that value as the brokerage charge. They have a minimum slab. So whatever be your trade value, they are going to charge you around 20 rupees, 25, 30 rupees as minimum brokerage. They will not accept 0.88, 0.9 rupees as brokerage charges. So you have to make sure that you understand these intricacies. Once you're talking to these executives, make sure you understand both sides of the coin before committing yourself to the stockbroker. So when we talk about full service stockbrokers, we have examples such as ICICI Direct, Motilal Oswal and Sher Khan. So all of these and more charge you a percentage based brokerage charge, and you have to make sure that you understand these intricacies. So this is one. And also you have to understand that these rates are negotiable in nature. In case of full service stock brokers, they might start with, let's say, 0.4% as brokerage, but you can negotiate it to much lower values, 0.1, 0.15. It really depends on your negotiation skills, your initial trading deposit, your overall turnover in the stock market, a lot of factors, but these values can certainly be negotiated. So this is full service stock broker. Then we have discount stock brokers in India. They charge you a flat rate, so there is a fixed rate brokerage. It doesn't really matter what is your trade value, they're going to charge you a specific fees for every trade you place on the stock market. Generally rates we've seen is in the range of 10 rupees, 20 rupees and something around that. And these rates are not negotiable in nature, they will stand at these values only. So in this case, irrespective of the fact whether you trade for 100 rupees, 1000, 10,000, 10 lakh, 1 crore, it doesn't really matter on your trade value, but in that particular case you are going to pay a flat brokerage rate of 10 rupees per executed order. Now for example, there are brokers such as 5paisa, there is Fires, there is Zerodha. Now all of these discount stock brokers charge you a flat rate, and you do not need to pay anything which is dependent on your trade value. So generally users who are entering into the stock market but they want to perform their own analysis, they do not have any dependency on the stockbroker for providing them any kinds of tips or analysis, they can stick to these kind of stockbrokers, because you will actually be paying up very small brokerage rates for the services. Then we have unlimited trading monthly yearly plans. Now there is a small set of stockbrokers in India that will charge you a fixed monthly, quarterly, yearly rate, and you can perform unlimited number of trades in that particular plan. There is no cap on number of trades or the amount of trade value you put in the stock market. There's nothing around that. You just have to pay a specific monthly fees or yearly fees, and you can trade according to your preference there. However, these kind of plans are generally suitable for heavy traders who've been in the stock market for a while and they understand the intricacies, because these kind of stockbrokers don't really have much to offer apart from their brokerage plans. So be it their trading platforms, be it customer service and related aspects, you will not be able to get much value from there, but you will be able to save some money by paying a fixed brokerage every month, and you can perform any number of trades in that. So just don't make your decision based on the price part or the price plan part. You have to understand what other requirements you have as a client, and basically from there you can make a judgment. Now there are few other types within stock market in India wherein there are brokers that charge you a fees based on the trading platforms, for instance. So they do not have a trade brokerage rate, they do not have a plan, they just see what kind of a trading platform you pick up from their offerings, and based on that they charge you a specific fees on a monthly basis, on a yearly basis, so you can trade on an unlimited level. Then for HNIs, for high net worth individuals, there are profit sharing models wherein if you are, let's say, starting with 25 lakhs at least or 50 lakhs or more, from that particular capital you can trade using the services of brokerage houses, where they will place trades on the behalf of the client, and they will take a specific share of the actual profit made by the trades placed by them. And there is no flat rate there or a percentage based model. There is a negotiation that happens at the very start, wherein a profit percentage is calculated between the two parties, and accordingly it is split once it is there. Then there are very few stockbrokers that do not have any brokerage whatsoever, but they'll charge you a specific fees at the very start, or they will say that you will be charged an AMC, annual maintenance charges, every year, and you can perform any number of trades for the whole time. So there are specific set of stockbrokers here, but we generally do not recommend them unless you have a specific curiosity or an inclination towards going ahead with that stockbroker, because there is very less that is given away by these stockbrokers in terms of service, trading products, trading platforms, exposure, multiple factors. So there is a minimum sort of a value provided on those aspects, and more or less other factors are made free. So these are different sort of a stockbroking brokerage plans offered by different types of stockbrokers in India. Then there are few final points that you must remember before you actually place your trades in the stock market. First of all, once you finalize the brokerage charges with the executive of a stockbroker, make sure to get it documented and emailed from the official email ID of the stockbroker house. Furthermore, always keep a close eye on the actual brokerage being charged on your transactions. Although India's stock market is pretty regulated in nature, but it's always better to avoid any potential financial hazards. Then the brokerage charge generally varies depending on your trading segment. Now you have to be aware of these rates across these segments and keep a close eye on what you're being actually charged. Thirdly, there are different types of other charges apart from your brokerage or account opening maintenance charges. There are things such as service tax, which is 15% of your overall brokerage, not your trade value, but your brokerage generated. Then there is stamp duty, which really matters on your state. Maharashtra, for instance, charges you 0.01% of your transaction value. Then there are SEBI turnover fees. Now this particular charge is very small, minuscule in nature, but again it's a percentage based. Then there are transaction charges, again percentage based on your trade value. Then there is capital gain tax as well. For instance, if you keep your stocks with yourself and sell it within the first year, then you're charged 15%. If you keep it for the first year, sell it the next, then in that case you are not charged that value. So there are different kind of intricacies here. You have to understand at the end of the day what actually you get caught up and what actually you make out in your profits as far as your trades are concerned from your stock market. Now, $1 million question: which brokerage type you should go ahead with? It depends on multiple factors. It depends on your trading behavior, what kind of a trading segment you are inclined towards, what kind of a trading stage you are into. Are you a beginner? Are you a medium trader? Are you a heavy trader? What kind of capital you are putting into the stock market? What is your trading frequency? Do you daily? Do you do once in a week? Do you do once in a month? So a lot of factors that come into picture before you should be inclined toward a particular stock brokerage type. However, if you need some help, some sort of assistance in finalizing a stockbroker for yourself with the corresponding brokerage type, you can check out this link, digitalblogger.com/free, call back broker choice, put in your details there and your preferences, and we will correspondingly set up a call back for you absolutely free. So that's it for the video. Thank you so much for watching it. We hope you liked it. In case you did, please go ahead and press the thumbs up button. We'll really appreciate that. You can also subscribe to our channel, Digital Blogger, at YouTube for similar videos in the future. We have presence on different social media channels. We have a website, digitalblogger.com, where we post content on a daily basis for our users. You can subscribe us there, you can like us, follow us, and stay updated with the stock market information. Again, thank you so much for watching the video. Bye-bye.